Good morning, everybody. My name is Tyler Gerking. I'm a partner in our insurance recovery group here at Farella. And today, I thought I'd talk about some insurance coverage issues in the cannabis space. And we've given this presentation a couple times in the past, and I thought what would be possibly most helpful and interesting would be to talk about first an overview of relevant insurance coverage types that businesses in the cannabis area should at least be considering or looking at, and then talk about just sort of briefly go over the case law landscape, and then talk about some cases that have been filed or have been decided over the past 6 to 9 months or so, just so you all can see sort of what's happening in the law with respect to insurance coverage for cannabis businesses these days. And I'm thinking I'll talk for maybe, like 30 minutes or so. But as Margaret mentioned, you can add your questions to the chat. And I have the chat function up on my other screen here. So if you submit a question, I'll try to address it as we go along. But if not, we can address it at the end. And we'll have some time at the end for some additional discussion. So with that, here we go. First, with the overview of the various kinds of coverages that businesses in the cannabis space will be, should at least be considering, depending on exactly what they're doing. You've got property insurance, typical property insurance that covers a business's interest in physical property, so it would cover the business for damage to property that it owns or has an interest in, and it would also cover business interruption losses, that is, lost revenue due to damage to that property or to a property on which that business depends. Pretty much all companies that have interest in property will have some form of property insurance, and I'll talk about that much more specifically as we get into the case law. Then you've got cargo and inland marine insurance, which will cover the business's interest in property that's being transported often or stored somewhere. Again, it depends on the type of business you are, but if you are shipping or shipping product or shipping supplies, that kind of thing, that type of insurance would be relevant. Then there is crime insurance, which covers the business for essentially money stolen from it, which can arise particularly for cannabis businesses, including retailers. That includes employee theft, so theft by employees. So that's one that's very commonly held by all types of businesses. And then we'll talk about some liability coverages. That is, insurance that would cover a business for claims and lawsuits that could be brought against it. So pretty much all businesses will have general liability coverage, some form of it. It's often referred to as CGL, commercial general liability insurance. And that covers claims for bodily injury or property damage and other types of claims for what we call personal and advertising injury offenses, like that would include certain IP claims. It includes defamation. Sometimes includes, or often will include trespassing, eviction, and the like. And then this is becoming a bigger and bigger issue in the cannabis area, product liability, specifically for harm caused by bodily injury, often caused by products that are being used by consumers. There have been a few relatively high-profile incidents and some lawsuits arising out of bodily injury caused by products, cannabis-type products. And then another area of insurance would be commercial auto liability, which would include autos owned by the business or being used by the business to move people and or products and or supplies. And then I'll also get into these last two in a little more detail because there's been some interesting developments or interesting events relating to them recently. You have directors and officers liability insurance, which for privately held companies often is called management liability insurance. It can often, the same policy can include employment practices liability, which I haven't listed here, but any business having any number of employees would want to have. But DNO for privately held companies will often have offer very broad coverage in the insuring agreement, and then it's sort of tailored down by exclusions in the policy. But it will cover claims against the company, as well as claims against directors and officers, as well as claims against employees for acts, errors, or omissions that they commit, or breaches of duty that they commit in connection with the business. So it can include, and the coverage differs slightly for companies and individuals, but it includes claims beyond just securities claims that one might assume DNO applies to for, say, public companies. And there, we've had claims where you can get coverage, or at least defense coverage, for trade appropriation claims, investor disputes, those kinds of claims. And the investor dispute scenario, which I'll talk about a little later, we've seen come up in several different matters in the cannabis area, and it appears to be relatively common. And so DNO liability insurance definitely comes into play there. So I'll talk about that in a little bit more detail later on. And then there's cyber insurance, which many businesses and many industries these days are now buying. The main reason that they buy it is to protect themselves from events such as data breach that compromises personally identifiable information of consumers. And certainly there are cannabis businesses where that's a big issue because they're collecting not just personally identifiable information, sort of blandly stated, such as name, email address, et cetera, but they also could be collecting HIPAA information and other sort of highly sensitive information of consumers that could increase their liability exposure if that information is disclosed or stolen. So cyber insurance can be a very sort of important part of a cannabis business's insurance portfolio, particularly for retailers. So I'll talk about cyber insurance and a data sort of an exemplary data breach that occurred near the end of last year, or early this year, to give you sort of an example there and some context. So with that, I'll move on to issues in property insurance, because that's often where, oh, and actually before I go on to property insurance, I'll talk about two other types of coverages that we'd want to see more of, and I think there's some uptake in the market on these, but still there's issues in getting this insurance, as far as I know. First, crop insurance. So this also comes up in the wine industry. Growing crops are often excluded from coverage under a property insurance policy. So if your crops are damaged in some way, oftentimes a property insurance won't specifically cover the damaged crops. There has been in the last year or two, couple of years, crop insurance becoming available for indoor grown cannabis crops. But I think it's still somewhat limited in terms of the scope of coverage, and you still have an issue getting coverage for outdoor crops. And obviously this is a big risk for any growers. And so this is something that when you're buying insurance, you definitely want to think about, look into, talk with your broker about what might be available and what is not available, and really understand sort of proactively what you can get coverage for and what you are getting coverage for and what you're not. Additionally, product recall coverage, which kind of goes back to the product liability point I made before. If you put a product out into the marketplace that needs to be withdrawn because of some defect in it, a lot of companies in various industries will have product recall insurance, which will cover your cost and your economic losses in some instances for having to go through that recall process. This is available to certain cannabis businesses. It still can be somewhat limited. So I thought I'd just mention that, because that's, again, one you'd want to think about if you could have responsibility for conducting a recall of a product, and you'd want to know coverage, and if so, what you have, how much you have and what you have it for. Okay, so now I'll talk about some of the legal landscape for property insurance. And we have more case law in this area, property insurance, than others relating to cannabis businesses. And so I'll focus on this a bit. And I won't focus too much on the older cases, and by old I mean up to about 2017 or 2018, because we've discussed these in prior presentations, but I thought I'd include them as a reminder, and it kind of sets the stage for a few more recent cases that have been litigated or are being litigated right now. Okay, so the first case that practitioners talk about in this area came down in 2012, Tracy v. USAA Casualty Insurance. And the question in that case was whether an insurer was required to reimburse the cost of damaged medical marijuana plants under a homeowner's policy. And the court found that that damage was not covered for a couple of reasons, which I won't dwell on too much right now, but it's sort of the beginning of this line of cases about whether you can insure activities or property that is related to the cannabis, growing of cannabis or sale for legality reasons. In Colorado, then we had a case in 2016, Green Earth Wellness Center via Tane Specialty Insurance Company, where the court sort of took a very deep look at whether inventory could be covered, cannabis inventory could be covered under a first-party property insurance policy, despite that policy having an exclusion in it for contraband. And the insurer was arguing that that exclusion applied because of how federal law defines cannabis in terms of defining it as contraband. And the court looked specifically at what the insurer knew it was insuring at the time it sold the policy, and found that the insurer knew exactly what it was insuring, that is the cannabis inventory, and that it would be essentially against public policy to enforce that exclusion in light of that fact, because otherwise the insurance company would gain a windfall by having sold illusory coverage to the insured. So that argument in that case for the insured won. And I think the theme in these cases, and this is the first one that really sort of gets into this, that we need to take away from these cases is that, what you say to the insurance company when you're buying the insurance is critical in terms of how an insurance claim may play out when you have a loss. So often what these cases end up focusing on is whether the insured company or individual fully disclosed to the insurance company what activities they were engaged in, what they were selling, how much, how big the business was, so that the insurance company was aware of the risk that it was taking on when it sold the policy to the insured. So the cases on the next slide will also kind of highlight this point. And this is, I think, one of the main takeaways is that folks ought to be really careful about answering questions on insurance applications and be as thorough as possible and strategic in answering those questions to ensure that in any later dispute with an insurance company, the insurance company can't argue that it didn't know what the insured was doing, or it didn't know that it was insuring something that it might later want to argue was illegal, at least under federal law. So this comes up in cases where you have property damage caused by growing operations. And we've discussed the first three of these before: KVG Properties, Yahoo Center, and Weingarten. In KVG, I'll just briefly mention these again to kind of set the table for the last two on the slide. The property owner had previously argued that, and the property owner was trying to evict the tenant, had argued that the tenant's activities were illegal, and then later turned around and tried to argue to the insurance company that it was entitled to coverage for damage to its property caused by that grow operation, and there was an exclusion in the property for illegal activities. And the insurance company basically said, hey, look, property owner, you already argued that this was illegal in court. You can't turn around and argue that that exclusion for illegal activities does not apply. So the property owner loses in that case. The Yahoo Center case involved damage to property, to premises caused by the tenant that was not covered under the property owner's policy, where the tenant represented that it was a business in online trading and actually uses grow operations. So essentially, the tenant, the grower, was not forthright in the application, and that didn't work out well for the insured there. In Weingarten, there was a question as to whether the private house, was being used principally as a house or as a growing location under the policy. So sort of another case focused on exactly, okay, you bought this policy, what really were you doing with the property? And is that consistent with what you had said you were doing with it when you bought the policy, and is the policy sort of aimed to fit this situation? Okay, so now that brings us to the two most recent cases. There's this one called Kinsale Insurance Company, the JDBC Holdings, Inc., which was filed earlier this year in West Virginia. I think it was actually filed in the state court in West Virginia and then removed. It's still pending, but the insurance company brought this case under a property policy to obtain a declaration from the court that it does not owe coverage for fire damage caused to the building. And the reason it is arguing that it does not owe coverage is that the insured business had represented in its insurance policy application that it had certain safety features in the building, and that those safety features were operating properly, including fire alarms, fire sprinkler systems, and the like. And after the fire, the insurance company did an investigation and discovered that, or claims to have discovered, that the building only had two sort of temporary sprinklers installed that were not operating properly, and that as a result, its risk that it undertook was different than what had been represented to it. And so it's arguing that it does not owe coverage under that policy. And that case is ongoing and being litigated. So we'll have to wait and see how it turns out. And there are a number of factual disputes in that case. But it, again, goes to show that to avoid disputes and to ensure you're getting coverage on a claim, that you need to be very careful in the application for insurance about answering the questions and answering them sort of accurately and thoroughly. And then this last case, Mosley v. Pacific Specialty Insurance Company, what is actually a very interesting one. I'd like to talk about that one in a little bit more detail. It is a homeowner's policy, so not necessarily sort of right on point for businesses, but it has sort of a good lesson in it. So, which is along the same theme that I'm highlighting in these other cases. So this is a Court of Appeal case that came out, just a week or two ago. So good timing so that we could talk about it here. The Court of Appeal reversed a summary judgment ruling that was in favor of the insurer on a breach of contract claim by the insured under a homeowner's policy. So the homeowner, the insured, had sued for breach of contract and bad faith for the insurance company's denial of coverage. The trial court held that the insurer was correct, that it did not owe coverage, and the insured appealed, and now the Court of Appeal has reversed the trial court's ruling and held in favor of the insured, at least on the breach of contract claim. And the analysis is really quite interesting, at least for an insurance coverage geek like me. So the homeowner's policy that the insured bought had an exclusion in it that eliminated coverage for losses resulting from any manufacturing, production, or operation engaged in the growing of plants. And the facts here were that the landlord, which was the insured under the policy, had rented to a tenant, and the tenant had been engaged in growing cannabis in the building, and in order to do that, had rewired some of the electrical system in the building and that rewiring caused a fire at the building. It caused damage, and that's what the landlord was trying to recover for. And so the insurance company said, well, we have this exclusion in our policy that eliminates coverage for losses resulting from any manufacturing, production, or operation engaged in the growing of plants. And clearly that's what was going on here. And that's actually what caused the damage, because the rewiring of the building by the tenant to help the grow operation is what caused the fire, and that was undisputed. The insured argued that an insurance code provision applying to homeowners policies, section 2071, which sets out the provisions that a homeowner's policy must have, and that states that all homeowners policies must be essentially as good or better than the provisions then set out in this code section. The insured argued, well, that exclusion for the growing plants is not in section 2071. So this policy is narrower than is allowed to have been sold to me under California law. And so the policy, or at least that exclusion in the policy, should be void. It shouldn't apply. The insurance company argued that, okay, well, maybe that exclusion, the growing of plants exclusion, is not included in 2071, but there's another exclusion in 2071 that's effectively the same under these circumstances. And that exclusion states that an insurer shall not be liable for loss occurring while the hazard is increased by any means within the control or knowledge of the insured. So the insurance company was saying, hey, landlord, you increased our risk, the insurance company's risk, because you allowed this grow operation to occur on the property. And the court, sort of looking at that on summary judgment, where factual disputes will prevent the court from granting summary judgment, and basically said, it's not clear that the landlord actually knew what was happening, or that the landlord controlled what was happening on the property, because if it didn't know, then it didn't control. And you have to have both. You have to know and control in order to fall within this exclusion as the insured. And the court distinguished several cases, 2 California cases that didn't have anything to do with cannabis, but were focused on exclusions in a homeowner's policy for business pursuits. And then it got to another case called National Mutual Fire Insurance Company v. McDermott, which was an unpublished case from the Sixth Circuit Federal Appellate Court in 2015. And there, the Sixth Circuit found that there was no coverage for grow operation because the insured knew about and did control that grow operation, and thereby increased the insurance company's risk without having disclosed that risk to the insurance company when they bought the policy. And the California Court of Appeal in Mosley said that, this case is different because the landlord didn't necessarily know, and didn't necessarily make any misrepresentation to the insurance company about what was happening at the property, and that's key to whether this exclusion applies. And so the California Court of Appeal sent the case back to the trial court to conduct a trial as to what the landlord knew or should have reasonably known about what was happening on the property in order to determine whether that exclusion applies. So again, just sort of driving home this point that insureds, when they're buying policies, often the key issue is whether they are telling the insurance company everything they know about what is occurring on the property. And that is going to be, one of the main issues that comes up in any claim. So, applying this to, from a week and a half or 2 weeks ago to the very present day, there, in the news, there's been a lot of reporting about cannabis retailers suffering sort of a disproportionate amount of the damage due to looting and intentional property damage done in protests and riots that we've experienced over the past week or two. And what is, really going to be key, I think, in a lot of the claims that will arise out of that, because those businesses should have property insurance, and that property insurance generally should cover those types of losses. But insurance companies looking for ways to reduce or minimize or get out of their liability will be looking at what was represented to them about what was happening at those properties, and whether product was being treated, stored, maintained as it had been represented to them and in compliance with regulations. So anyway, that's where we currently are at in terms of the state of law on insurability under property insurance policies. I'll move on now to DNO liability. And I wanted to point out this case just because, it's not as if we needed any more confirmation that our world is just totally upside down and not as we believed it to be. But this case really confirms it. It's called Cultivation Technologies Inc., the Scottsdale Insurance Company. And it involved its ongoing case, an investor dispute in a cannabis business where the investors allege that the former board and the former management was looting the company, essentially engaged in a sale of assets to a third party in which some of the board and or management had an interest in, and that the sale was not at arm's length, and essentially moved the company's assets to, out of the company into their hands. And so the investors removed the board and management and installed, new board and management. And they were dealing with the issue, and litigation broke out between the former people and the investors. And Scottsdale Insurance Company had issued a DNO policy to the company that was in effect when the claim was made, and it covered the former board against claims for allegations of wrongdoing when they were at the company. And in this case, the investor, so Scottsdale, defended the former board in this lawsuit, which is not surprising, and seems should have been how the insurance coverage played out. But the investors sued Scottsdale while the underlying suit was ongoing, and sought a declaration that Scottsdale should not be permitted to defend the former board members, essentially saying that those former board members had been removed because of illegal conduct, and that they should not get a defense. And Scottsdale argued or moved to dismiss the case that on the grounds that the underlying case was ongoing and would determine, whether these former board members had engaged in misconduct, and that Scottsdale was required to defend them under the policy, and that the court should allow that underlying suit to play out. So Scottsdale sought to dismiss or stay that coverage suit in deference to the underlying case, which is the exact opposite of our Scottsdale's positions in many other cases that we've been involved with him on. So I just thought that aspect of it was funny. But more importantly, it shows that it's sort of an example of how disputes involving allegedly unseemly conduct by management or the board can get very ugly and can get very expensive. And that's why companies buy DNO liability insurance to protect, one, to encourage people to serve on the board and to serve in management, and then later to protect them when there are claims. And it can also cover the company if the company is being sued itself by a third party. So it's just sort of an example of how DNO liability insurance can work, in that it will provide at least a defense against allegations of not just misconduct, but illegal misconduct. And it will continue defending until there is often a final adjudication of that illegal misconduct. So it does provide significant protection to individuals as well as the company. So our last topic is cyber insurance. There was a data breach right at the end of last December and going into early January 2020 of a software platform that was used by a number of dispensary operators to essentially gather information in compliance with state and local regulations that those dispensaries were required to gather. So basically help them collect, store, organize data that they were required to keep by regulation. And that platform was breached, and the information of about 85,000 users was compromised. Consumers was compromised. And it involved the customers of three dispensaries, three larger dispensaries and some others, a couple of which were focused only on medical marijuana, whereas the third was selling recreational marijuana. And the information that was leaked included full names, phone numbers, dates of birth, medical ID numbers, signatures, amounts purchased, and the amounts paid in the purchase, as well as other information. So this breach implicated not just personally identifiable information, but also some HIPAA information and other information that consumers often would want to keep confidential. And that breach exemplifies why particularly retailers, but not just retailers, would and should be focused on cyber insurance, because cyber insurance will cover that company's costs for responding to the breach. So they'll have to hire an attorney, they'll have to hire a forensic investigator to determine that there was a breach, to determine what information was compromised and how extensive the breach was, and then to notify consumers of the breach and provide them with some remedial measures. cyber insurance will cover all, those costs. Cyber insurance will also cover, and this is sort of a new coverage that's coming, becoming more common in cyber insurance policies, is they'll also provide some coverage for reputational damage, as well as coverage for business interruptions. So if a company's systems are brought down and they're unable to conduct business because the system is brought down, either by a cyber attack or by just an error in updating the system or maintaining the system, their lost profits can also be covered during that downtime period. So this type of insurance for some businesses in the cannabis industry is going to be really key. And this insurance, cyber insurance, is also sort of highly negotiable and needs to be tailored to a particular business. So you want to pay very close attention to what the policy says in the policy form, and how broad the coverage is, and whether it's providing the coverage that you really need. So if your main risk is operational in terms of manufacturing, and that manufacturing process involves some computerized system, and that system could go down and interrupt your operations, then your focus really should be on business interruption, and whether the policy would cover that type of situation if your computer system brought down your operations for some extended period of time. If you're a retailer and you're collecting highly sensitive confidential information on consumers, then the focus should be more on the data breach side. But either way, it should be something that you sort of proactively and deliberately purchase, as opposed to getting something off the shelf, and you want to get it tailored to your risks. So with that, actually, I talked a little bit longer than I had intended. I apologize for that, but I'm happy to answer any questions or have any sort of discussion that on any topic that y'all are interested in, that we can do by chat, or you could unmute yourself and lob in a question. And if there are no questions, we can sign off.